Hello, welcome everybody. Thank you for being here. We are broadcasting live from Park City, Utah, where I am. And you are, Tracy, where are you now?
Big
Oh, in
Sky,
Montana.
Montana
Big
today.
Sky,
Yes,
Montana.
right around the corner from you,
Yeah.
Arthur.
So come on out, everybody. Plenty of snow on the ground if you want to ski here. So thank you again to the Family Office Insights community for being so engaged through all the webinars as opposed to in-person things. We're super grateful and appreciate you being part of the community and participating as you have. Just a little Zoom housekeeping. As you all know, we can't hear or see you, but don't let that stop you from asking questions in the chat box or the Q&A as we go along, as they come to mind. We have a whole bunch of folks coming on today, so we'll get to as many of the questions as we can, but don't be shy. We'll definitely get to as many as possible. We're going to be recording this, and I think we can publish it, Tracy. I mean, with disclosures if you want, but
Of course.
generally we'll post it to the Family Office Insights YouTube channel. So
Great.
if not only the attendees want to review it or share it with others, I benefit from hearing about it. And of course, as usual, we'll put Tracy in touch with everybody that has RSVP'd and been on the call here. So feel comfortable knowing that you'll be put in touch directly, and there's no need for us to be involved in that. And I say that for two reasons. One, we don't have the time. Second, we don't get paid. So you don't have to worry about us getting into your investment pocket, and all the money that you give Tracy will go to work. So we have skin in the game that we like what Tracy's doing, but we don't have skin in the game as a success fee participant, just to be clear. And I know most of you know that already. So with that, thank you again for being here. Tracy, take it away.
Thanks, Arthur. And you and I were just having a really great conversation about the Forbes 50 over 50. And I was lucky enough to be in the inaugural class of that with such luminaries as Jennifer Doudna, who founded CRISPR, and Mary Barra of GM, quite an esteemed list. And we were talking about you joining the 50 over 50 list, which I think would be terrific too. And that's part of the background of what we're trying to do with 1843 Capital is we're an early stage venture capital fund that is trying to challenge the norms of how we experience and view aging. And Arthur, there's no reason why you can't do your best work now and have accolades for doing your best work. As
anything would be better than what I have done, right?
I'm sure that's not true, but it's really exciting. People are living longer and longer these days, and there's lots of opportunities for second, third, and fourth career out there for sure. So
Well, I will definitely apply, but there may be too many skeletons in the closet.
yeah, I hope not. Well, it's exciting. It's exciting to see that people are being recognized, for doing things at all stage of their career. And there was a really interesting article that came out from the Stanford Center for Longevity back in December, and it said that we are going to have three stages of our careers. So there are going to be a 60-year career, believe it or not, broken up into three different sections of 20 years apiece. So that's something that's definitely of interest for us. And they have found as well that a 5-year-old boy today has a very good chance of like a 50% chance of living to 100. So it's we just are going to be around for a long time and have a lot of experience and have a lot to contribute. So it's exciting to see all this happening.
Yeah, and I'm totally with no sarcasm intended. I'm totally on that ship, not just because I want to be around longer, but I think it's quite possible. And I think I mentioned this to you. Mary and I have been, almost every day doing yoga, and it's made a huge difference
Fantastic.
in my ability to drink more bourbon.
Well, there's nothing wrong with drinking bourbon, but I'm glad to hear that you're doing exercise
Yeah,
and keeping your health as well. And there are several companies that we've invested in that are absolutely helping people age better and live longer, which is kind of the point. So glad to hear that you're doing the yoga and staying
yeah,
fit, because that is absolutely within some of our healthcare initiatives. Yoga and meditation are part of the protocol, right alongside prescription drugs. So it's we're moving into a new time where we're recognizing that a lot of those things can be very effective.
yeah, totally makes sense.
Yeah.
Just a quick shout out to Pete. Thanks for being here.
Oh,
Um,
hi, Pete.
okay. All right. So carry on. Thank you. I'm gonna go and get out of your way here.
Should I just start with a little bit of background, or should I
Yeah,
launch into
yeah,
the
yeah. Do some
presentation?
background and then go ahead and open up the deck would be great.
Okay, sure. So, just by way of background, I'm Tracy Chadwell. I'm the founding partner of 1843 Capital, and we are trying to challenge the norms of how we experience and view aging. We feel like there is a terrific opportunity around technology for solving problems of people as they age and for longevity solutions to help people age better. We have formed the firm back in 2018 and are now looking to raise fund number two. By way of background, I'm a lawyer originally, which comes in handy for deal structuring and analysis of the documents. It's very important to know exactly what you're holding when you're making an investment in a private company, and very often I think people do not because they don't fully understand the documents. So that's been terrific. I also have a finance background. I worked for Robertson Stevens. I also worked in Tokyo for Nagashima and Ono doing cross-border transactions with a law firm there, and then became one of the first women partners of a venture capital fund when I became a partner of Baker Capital, which was a $1 billion growth capital fund focused on telecom. I have a personal track record. I have done 10 angel investments. And of those angel investments, I have two that have been realized for around $1 billion valuation. One is Beauty Counter that was sold to Carlyle, and the other is Tempo Automation, which is going public at a $919 million enterprise valuation. So 20 times my money on one, 24 times my money on the other. That's a very good batting average. On the back of those, I was able to raise our first fund, which we started in 2018. And we have just finished allocating the capital for that and are moving on to fund two here. So with that, I think, Arthur, should I launch into the presentation that I
Yeah,
have prepared?
let's go ahead.
Great. Okay.
Yeah,
Thanks. And Arthur, I'm not watching the chat, so are you watching that, and will you interject or?
I got it all handled.
Great.
No
Okay,
worries.
great. I'll go ahead and share my screen, but please feel free to ask questions as we go along, because I prefer to have a conversation.
So there's one right away. How large was the first fund?
The first fund was 13 million. We had 52 investors and one institutional investor in that fund. And fund two, we are seeking a target of 75 million. So
Great.
let's see. So one of the things, when we look at companies to invest in, and we typically invest at Series A and Series B, but sometimes we'll invest in seed, especially if there's an experienced founder, is number one is the team. And we really have assembled a terrific team and feel like we are the penultimate investors in the aging space. And this will give you a sense of why as we go through who the team is. So as a reminder, I'm Tracy Chadwell. I am the founding partner of the firm. And my background is both law, venture capital when I was at Baker Capital, when I was at Robertson Stevens as well. I worked with their internal venture capital fund and am the founder of this fund. Janet DeFrino is terrific, and she is great with both, we say, financial analysis and financial advice. So she is the partner that is responsible for helping us with all the due diligence, but then also preparing our companies for the next round of funding with their projected financials. This is something often that companies struggle with, and you'll see that as a theme as the intentional construction of this firm is around plugging holes that a lot of companies have. So Janet's fantastic with that. She was with Morgan Stanley, also managed some money for the Bass Brothers, and a great member of our team. Sharon Rodriguez is our most recent partner. And Sharon and I have been talking for a long time about her joining us because when we look at different initiatives in aging, some of them are around caregiving and healthcare, but there's also a tremendous amount of retirement opportunity. And so Sharon was one of the founding part or the team members of Uncork, which is a no-code solution. This company was formed in 2017 and was recently valued at $2 billion. So Sharon is an extremely successful founder and operator. She also was the head of global strategy for MetLife. So this brings in a lot of that financial services for retirement and annuities perspective that is going to be really helpful to us. Larry Flanagan is our executive advisor, and Larry is terrific. Larry brings a couple of different skill sets to the table. One is that he was chief marketing officer of MasterCard. So very often we see companies that have good technology, but very poor sales and marketing. And I would much rather invest in a company that has great sales and marketing and good technology than one that has limited sales ability. And so Larry is incredibly helpful with companies on the marketing side, but he also was the president of AARP Services. If you're not familiar with that, AARP Services is the for-profit arm of AARP. And it's incredibly exciting to have Larry on the team because a lot of times we'll come up with ideas and say, Larry, we think that this is a really interesting place to invest. And he'll say, oh, we tried that at AARP, and here are all the reasons why it didn't work. So it's just been so valuable having him on board. Gwen Weiss is our chief financial officer. She was controller at another very well-known venture capital fund. So we've been doing institutional reporting from day one, and she's in the midst of handling our audited financials right now. Mary Alexander is wonderful. She is our analyst and came out of a data analytics firm called Predicta. So that's basically the team, and you can see how we can really get in and plug holes for our investor or for our investee companies as they start to grapple with certain issues.
So while you're on that
Yeah.
page, one
Oh,
second,
sure. Yeah,
a comment and a question.
sure, of
Five
course.
of the six people on the team are women, which is fabulous. And which is gender a major factor in your investments?
So we are not a gender lens fund. We are a above market return first fund. We are looking to return capital to our investors first and foremost. But we feel like diverse thinking is very important. My team was assembled sort of because these were the people I knew, and these were the people that I thought were terrific and brought to the table. We also have an internship program, and that's 50-50 on a gender basis, but we also have some diverse people on that. And then we have a great advisory board that has a mix of men and women as well.
Got it.
Yeah.
Okay.
Okay, let's go on to how we did. So, track record is always important. And I shared with you some of my personal track record, which is that I've had two home run exits of one 20 times my money and the other 25 times my money in my personal portfolio, which was 2 out of 10 investments, which is a great batting average. But then also too, in terms of the fund structure, how we've done. And so far, so good. We have 37.8% gross IRR that we're showing in Fund 1 with a 25.9% net IRR. This is with many of our home run companies sitting at cost. So we still feel like this is very conservative. We have a 1.7 times gross money on invested capital, which is very strong as well. Besides the silver tech deal flow, we also in Fund 1, we did both a generalist opportunistic basket and the silver tech basket. And you'll see that as we move to the portfolio page. But we are very much, I always say it's the calls you make, not the calls you take. And that's very much on the silver tech side. We are thematically investing and looking at different sectors that within aging that we think are interesting, evaluating them from a payer perspective and a customer perspective and general market opportunity, and then going out and looking at all the companies in the space before we make an investment. But we also, obviously, through our network, we have a terrific network with the team, and with my being named to the Forbes 50 over 50 list, it's been even better. And I certainly have been able to get all my calls returned, which is a really nice thing. But we have a tremendous amount of deal flow that comes into us as well, about 800 companies a year. And we do sift through those and look for opportunistic investments as well. Um, Primarily for Fund One, we were seed, Series A, and Series B. Our sweet spot is really Series A. We really do like when we have seen a proven market opportunity. One of the things you get at Series A has a tendency to be pricing. We like to see pricing. We like to see who the customers are and whether there's a net revenue retention, what your customer acquisition costs are to your LTV. These are all things that we're looking at, and you can get a better sense of that at Series A. However, we have been doing a few seed stage deals, especially as we've seen more and more entrepreneurs come back to the table. And we've been able to back some entrepreneurs that have done it before. And so we're really comfortable doing that at the seed stage. And obviously, with valuations increasing, you are always getting much better pricing at the seed stage. So we have been doing some there. Just to note, we have over-indexed on diverse founding teams. That means with a person of color or with a woman. So you will see that 83% of our companies have founders that are diverse. And we just think that that can sometimes, having different minds at the table can sometimes lead to better outcomes. But it's
Since,
not intentional. It's just just my network.
yeah, totally makes sense.
Yeah.
Since you brought up the valuation frothiness,
Yep.
which you didn't really bring up, that I just did.
Yeah. It's okay. No, we're
You could
happy to
talk
talk about it.
about how you've been able to find things that are just not too expensive.
Yeah, I think that that comes along with being, thematically focused. We are often the first call into a company that, hasn't even really considered investment. And so we do have the opportunity to get in at a better valuation. But then also too, we're the leader in this space. So people are willing to take a little bit lower valuation to work with us, number one. And number two, you don't have 300 funds in the space. Obviously, Web3 is very exciting to us, and we think that there's a lot of interesting things in that. And with cryptocurrency is very interesting as well. And we do have a company that's in that space in Fund One. We feel like there are so many funds that they're all bidding up the prices, and we don't have as much of that competitiveness in aging. And I think the primary reason is because while there's a lot of companies making a lot of great progress and selling at great valuations, like Place for Mom that sold to Silver Lake for $800 million, and the Fall Call that sold to Best Buy, which is a personal emergency response system, and then the longevity companies that are coming up. I think that still the attraction is still over on the sort of the Web3. It's very sexy and very exciting, and aging maybe isn't as sexy, but it's certainly a great market opportunity.
Great. Perfect.
Yeah. Yeah. So, okay, so let's move on to this is our portfolio from Fund One. So this kind of gives you just a general idea of what we are interested in and what we did in the Fund One space. On the left, you'll see the silver tech deals that we did. Sagely Naturals was a to disrupt Aspercream, and we did have an exit in that company already. On the digital health side, for things that people are experiencing as they age, MIDI Health was by far the best company that we found in the menopause space. Menopause was something that we were really interested in because 20% of the workforce is currently in menopause. And when you're trying to recruit and retain women in the workforce, this is one problem you can solve easily with a telehealth solution that is holistic. And the way that they approach it is not just prescribing hormone replacement therapy, although it is sometimes appropriate for some people, but also through behavioral methods and meditation, yoga, like we were talking about, Arthur, which is really terrific for people and can help their menopause symptoms as well, and maybe some supplements. Recuro Health is by far and away our wild west winner in the portfolio so far. Recuro was started by the two founders of Teladoc, Michael Gordon and John Halsey. And through personal relationship, and because I'd known Michael for a long time, when he mentioned that he was going to start Teladoc Part 2, I said, well, Michael, you can't do it without letting us be in the initial investor group. So we participated both in their seed stage and in their Series A. And we are sitting at 6 times our money right now in that company, which is
How
really
long has it been?
under a year.
Yeah.
So, so this is, this can happen. Yeah,
Mhm.
this one of the interesting and unique things about this company is that is virtual primary care that is trying to keep people healthy. So as we're aging, let's not like people, let's not do sick care, let's do health care. And they took the genetic protocol out of the Cleveland Clinic. They bought that, which is both a combination of genetic testing coupled with family history. And they're using that to personalize everything they do then on the virtual primary care side.
Yeah.
So just to touch base too on the other ones, mobility, you may say, "Oh, Tracy, what is May Mobility doing in Silvertech?" But it's very intentional. In fact, one of the things that I really like to do is talk to the customers. So before we even invested in this space, I went on and talked to as many people in the senior care space and caregiving facilities, senior living, assisted living, people that were responsible for staffing ADL support, and found out that one of the biggest issues was transportation. If you don't have transportation, everything starts to decay. You can't get to the doctors, you can't see your friends, you can't do your grocery shopping. So health really falls. And also, too, a lot of the senior living facilities wanted to take transportation off their balance sheets. It was by far and away, I used to say, what are your three largest problems? I'd love to solve them. And transportation was always on that list. May Mobility has a driverless shuttle company, which is autonomous. It's one of the few that is actually has revenue. And we are really excited because Toyota Ventures just announced another new raise for May of $150 million, which is exciting. And Hop Skip Drive, we looked at all of the care driving companies, and a lot of them for seniors were tough because customer acquisition cost in this space is really, really hard. And what Hop Skip Drive was doing was creating a floor for revenue and a floor for jobs for the drivers, because it's a marketplace. So you always have that issue of trying to get the customers, but then also trying to get the drivers. And for Hop Skip Drive, they were selling into school districts. And while they had a huge dip during COVID, obviously because kids weren't going to school, but then after that, it's just exploded again because of, I don't know if you all have been reading about the shortage of bus drivers, but it's been a really big problem. And so Hop Skip Drive is back 140% of the 2019 revenue, which is exciting. And then also too, CareLoop. CareLoop is a care coach company. So if you work for Procter and Gamble or for Pfizer or for BlackRock, you can have a CareLoop coach, which can help you through a caregiving journey. Like say your mother's been diagnosed with Alzheimer's. I'm sure a lot of you have had problems with aging parents and not knowing where to turn. And this allows you to stay at your job and to continue to do your work while having a care coach assist you in figuring out, does mom belong in assisted living? Can she stay home? Which 93% of people do want to age in place. What kind of sensors could we use? How do we navigate Medicare, Medicaid? And so all of these questions, in addition with emotional support, can be helped by CareLoop, all free to the employees. It's an employee benefit. So from our perspective on the financial side, we really liked it because the customer was the human resources benefit groups of large corporations, and they have, major six-figure total contract value, or actually annual contract value clients in this space. But then also too, there's real demonstrable ROI because they can show for every hour of caregiving support, that's an hour that the employee could be back at their job. And so then on the generalist side, we've had tremendous success on both the fintech side and on the cybersecurity side. We're sort of getting a reputation for backing women in cybersecurity, and Bishop Fox Envale has grown 900% since we invested in it. So really excited about that one as
Wow.
well.
Wow. Wow.
And we'll continue to keep that opportunistic basket open as things come through our network.
Very cool.
Yeah.
Did you in helping these companies along, particularly the one that you mentioned with the drivers,
Right.
um, and this is just anecdotal, I
Yeah.
don't know how much everybody else is, but it's impossible to get a Uber or a Lyft in Park City.
Sure.
The Whole Foods can't serve pizza until after 1 because they can't get anybody to work. This
Right.
workforce management thing seems to be, a problem that we have to live with during these times. Have you
Incredible.
experienced that in some of the companies that you've invested in?
Well, Hop Skip Drive is the one that has drivers. So with Carry Loop, that they actually are paying the people to work for Carry Loop more than they would make normally. So that's not an issue. And obviously a lot of this can be, even though it's very, very profitable, has a mission associated with it. And so I think it's that emotional connection for people as well. So with Hop Skip Drive, 90% of the drivers are women, and they are continuously monitored, continuous background checks. They have specialized training program. But I think that a lot of these women really enjoy driving children to school rather than taking a typical Uber customer. And I know certainly a lot of them don't enjoy driving, at 11 o'clock at night, picking up people from the bars. So this is a great way. Plus, they can fit it into their schedule because remember we talked about these enterprise customers that are selling into school districts. So they know I'm driving Mary at 9 a.m. tomorrow, so they can plan around it rather than Uber, which is sort of a more of a catch as catch can.
Yeah. So one quick question on the range of your investments in terms of size.
Mhm.
Can you make a comment about your sweet spot, or is it just a function of the opportunity?
Well, so we do look for primarily Series A deals, and we do like around 2 million in annual recurring revenue. Typically, as you can see on this page, the size of the rounds that we participate in are often very large. So we like that because we like companies to have enough capital to get to prove out their next metric so that they can either get to the next round or be appropriate maybe for a strategic sale. And so the median round is 7 million that we've invested in. The average round has been 13. So obviously we have room for a much larger fund. But we will do smaller rounds where actually the first deal in Fund 2 is a $4 million round that we are leading. So we'll do smaller rounds as well. But I really, at all times, and especially this time, want to make sure that our companies are adequately funded to get to the next stage, while balancing that with the needs to keep the founders happy and making sure that they and we are not too diluted.
Yeah. Would you mind sharing just for a moment what 1843 means?
Oh, sure. Yeah, sorry. I probably should have started out with that. 1843 is the year that Ada Lovelace wrote the first computer program. And we chose that name for a couple of reasons. One is that we just wanted to have a nod to the fact that, we're a women management team and we wanted to say, hey, women have been in technology for a really, really long time. And we like to joke, well, what if Ada had been funded? But then on a more practical level, uh, 1843 was something that we can trademark, but then also too, it gets us to the top of every list. So it's the top of every venture capital fund list. It's the top of funds in the aging space lists. It's the top of women manager list. So it's been a great name.
Very clever. Yeah, nicely done.
Start on to what we're looking at on two. Thank you.
Yep.
Yeah. Great. So, we're really excited about Fund 2. It is a $75 million target for this. It will be 75% in the silver tech space and 25% in the opportunistic basket. We have not changed our terms from Fund 1. We are a very investor-friendly term fund because we do have a European waterfall. So we are very normal at the 2% management fee and 20% of carried interest. However, all of the invested capital and all of the fees incurred are returned to all of our investors before the general partner participates in the 20% part of the profits.
So said a different way, it's 100% catch up before you take your carry.
Exactly.
Yeah.
Exactly. Yeah. And you know what? We just think that that's right because if the investors are the ones, we're investing $1 million as well, but with the investors, we feel like they're the ones taking the risk with the capital, so that they should have at least their capital return first.
And
So,
the 2% is enough to run the business.
well, I have been running it with a lot of my own capital as well, but yes, for the 2% for the 75 million, absolutely
Yep.
will be.
Great.
But this is such a great opportunity. I've been willing to put my money where my mouth is and support it.
Yep. Totally makes
Yeah,
sense.
yeah. So obviously, silver tech is going to be a big part of what we continue to do. And just as a reminder, we do have this database of companies that we have talked to each and every one of them, about 500 companies. We are a member of the Age Tech Collaborative for AARP. I was just actually, prior to this phone call, Arthur, I was on the phone with a lovely woman from Pivotal Ventures, which is Melinda Gates has really gotten behind this space as well. And Pivotal has been very interested in aging and caregiving. And one of the interesting statistics that they've found is that caregiving is a $648 billion economy, which is just incredible. We have Larry Flanagan, obviously, who was the former president of AARP, which is a huge competitive advantage. And in terms of this market opportunity, this is an $8 trillion economy. This is not going away. And I think that the reason there hasn't been more venture capital focus on this is because younger people necessarily in the past had not been building these companies because they didn't understand the pain points, because maybe their parents are still in their 50s or 60s, so they really haven't aged, and their grandparents are older as well. And then the same with venture capitalists. A lot of them are in their 30s and 40s, and they really haven't experienced the pain point either. So we're fine with that.
Or live through the horror.
Yes, yes. So
Yeah.
we're thrilled with that, and we are happy to take advantage of this for sure, and to be the first call. So this is just to give you sort of a taste of what we do and what we're looking at. Caregiver technology. Obviously, we've looked at 62 companies in this space, on the health, on the aging side, analytics and menopause. We've looked at 95 companies in this space. Consumer products, which is, we did the one in the consumer space. Consumer is not the same fun game it used to be now that the customer acquisition cost has gone up, and Facebook is not, and Instagram are not the treasure troves that they used to be. So we're still looking at consumer products in this space, but we've sort of not made it a priority going forward. And obviously, one of the biggest opportunities, as you can see on the right, oh, sorry there, is the financial and legal side. I call this the spinach corner. It's the place where this is really things that we need. Obviously, we are looking at Social Security running out in 2037, and we really need retirement products. We need people to save. I always say I think having your IRA and cash should be against the law.
Hmm.
But it's been really hard, even though it's something people need, they don't want it and they don't engage with it. And so we are really trying to get creative, and putting Sharon Rodriguez on point for this, of trying to find some creative retirement solutions. So just to give a flavor of who we are and why we are the first call, I think people have found what we're doing interesting. So we're getting a lot of great press. Forbes, obviously, Entrepreneur Magazine. There are a lot of new media outlets for interest in the aging, like the Gerontologist and A Certain Age podcast, and Boomer Living. It's really an interesting new space, and we're excited to be in the center of it. So great. So that's the contact details. If you'd like to reach out to me, I would be happy to talk to you. Tracy at 1843capital.com.
Yeah, very, very helpful.
Thanks, Arthur.
So yeah, no, well done, helpful. You were going to do this anyways, but send the deck to me.
Yes, absolutely.
We have a comment, I think, is more than a question, or it is a
Okay.
question. Does ESG perform or play a role in any of your investment decisions? The sustainability goals for
Sure.
you and that sort of thing.
Sure, of course. It is a byproduct of what we do. Just about everything that we invest in is good for people and good for the economy. I think May Mobility is a very good example of that, where our primary reason for investing in it was mobility solutions for people as they age. But obviously, these are electric vehicles. They're saving people. They're saving the time for people to get around, but then they're also environmentally friendly, and also having not as many cars on the road is very good for the environment as well. And I think the same could be said of hop, skip, drive as well. But I don't know that we're not designated as an ESG fund.
Yeah. How far along on the raise are you? I know you just started, right?
Yeah, we just started, and we are very fortunate to have a lot of interest already. So we have had 80% of our existing investors come back, and that was fantastic news to us because a lot of them are individuals and they didn't necessarily have a venture capital basket. So very flattering that they have decided to come back, and many of them have doubled or tripled their commitment, which is wonderful. We also have our existing institutional investor returning. We just received a commitment from a $26 billion money manager the other day and are in due diligence with 4 different endowments and foundations. So things are going quite well.
And is the, excuse me, the structure uh, total committed capital in, or is it a drawdown?
So no, it's a drawdown. So
Yeah.
we do that on a deal by deal basis. You will receive a capital call for us certainly when it's time for the management fee, which is we do that at the beginning in January and then mid-year again. The way that I have told people to look at it in the past is that take the commitment that you are thinking about for the fund and then think about 20% a year for 5 years. And we're just about on track for that for Fund One.
And what is your comfortable low end check size? $1 million?
So yeah, we that is we have a $5 million minimum, but
Okay.
that is primarily that's for institutional investors. But we are absolutely welcoming other investment sizes as well. Around 1 million or so would be great, and we'd be willing to negotiate that, especially if it's someone that has some value add and be interested in having a relationship with us and maybe bringing us some deal flow and other ideas. So.
Yeah. Yeah, and for the record, folks, the we haven't picked a date yet, but we're uh, happy to announce that we're going to have Tracy back with an advisor to an investor to talk more about what they're up to and sort of a fireside chat coming up here in a few weeks. So we welcome you back to do that. Would be super fun and nice. Appreciate that.
Yeah.
Yeah. So very, very helpful. Is there anything else you'd like to close with, Tracy?
Just that we think that this is the most exciting market opportunity there is. There's a lot of pile-on in terms of, Web3 and the metaverse and cybersecurity, which is great, but we cannot ignore the fact that the largest market opportunity right now in this country is people over 50. So I'd love for anyone to join us if they'd be interested.
Is there I've just thought about this since you brought up the
Sure.
Web 3.0 and metaverse.
Yeah.
Can you talk about your crypto digital investment, whatever that happens to be?
Yes. So remember, we do have the opportunistic basket, and this is because the firm as a whole and myself certainly have a tremendous network. And we are very lucky to have first eyes on some really exciting opportunities. And one of those opportunities was in the custody of digital assets space. So I don't know if anyone on the call is familiar with Caitlin Long, but she is absolutely the godmother of cryptocurrency. She was at Morgan Stanley and was the head of pension solutions and decided to move back to her home state of Wyoming, where she was responsible for changing all the laws and working with the government there to make a comfortable rule of law for cryptocurrency companies. So that's why you'll see a lot of them established. She was the first one with her company. It was called Avanti Bank, but it's now subsequently been renamed to Custodia, was the first one to get a bank charter. And she just also received her ABA routing number the other day. So that's really exciting news. And there is a major announcement that she is going to be making in the next couple of weeks about a partnership with a major wealth manager. So we're really excited about what Caitlin is doing. I know that people have a lot of very divergent views on cryptocurrency and digital assets, but I think one thing we cannot deny is that there are a lot of people that are interested in holding them.
No,
Whether you believe whether you believe they are interested, whether they exist or not, you do. It's a fact that people are holding them and need places to do that. And she also has been developing a U.S. dollar backed token as well. And she is working very closely with Jay Powell at the Fed on this and could be the white label solution for it. So very, very excited about that company. And we're holding that one at cost. So,
And so it's all your fault that I was introduced to her by you, and we've had a
yes.
conversation, and she'll be coming on a Luminary series.
Oh,
We'll
she's
have
fantastic.
to, yeah, we waited because she didn't know when these things were going to come, and we're all
Exactly.
confident that they were going to come. So
Yeah.
it was good to wait for that, and it's exciting. Super.
Well, I'm excited for that, Arthur. I'll watch as well. That'll
Yeah.
be great.
Um, let's see. Oh, just a very nice comment that you will share with you later.
Okay.
Not that
Great.
it's uh, uh, for the record, everybody who's saying anything, we'll share them with Tracy later. We just don't want to take time to repeat it on the air here now, but it's all good stuff. So
Oh, fantastic.
yeah,
Great.
all
Great
very,
to
very
hear.
nice comments.
Good.
Okay. So again, this is being recorded. We're gonna put it on the YouTube channel. We'll put everybody in touch with Tracy. She's and I can say this, and you can yell at me, Tracy, but this webinar is not only so you get to know Tracy and what's going on with the firm. The primary interest is to, as investors. So if you want to pitch your company or do something else, then maybe you want to put that on the back burner. But the primary reason, and I just want to clear that up. And Tracy, I know you're interested in deal flow, but I just
Of
don't want
course.
people calling you and saying, "Hey, do this favor for me, do that favor for." So I just want to say that out loud to the audience here.
Okay.
Yeah. Okay.
Great.
Thanks
Yeah.
so much. We'll see you in a couple weeks. And then on the Luminary series. And thank you again for doing this. Super appreciate
Oh my gosh.
it. Mhm.
Arthur, thank you so much. It was really fun.
Yeah, great.
Good.
Thank you.
Okay.
Till next time. And as I
Bye.
always say, thank you for everybody for sharing with us the only thing you can't make more of, and that's your time. Thank you. Bye-bye.
Bye-bye.